Welcome back to my channel, guys. In today's video, I'm going to be teaching you guys how to get started investing in the stock market and also how to become a millionaire before you retire. And this is the guaranteed way to become a millionaire. And look, this video isn't clickbait at all. Investing in stocks doesn't necessarily mean investing in individual blue chip stocks like Apple or Microsoft. What I'm going to be teaching is long-term index fund investing, which is different, but more on that later. And also, before we move on, to be able to do this, you need to be able to set aside £100 per month. If you can't do that, then you can't do what I'm going to teach you in this video. But £100 a month shouldn't be difficult for anyone. But yeah, when I said guaranteed millionaire status, you have to remember that this is something that will happen automatically in the background. This doesn't mean that this is just the only way that you can become a millionaire. You can obviously become a millionaire before this, but this is just like that safety net. If everything goes wrong and you don't do what you want to do in life, you will have £1 million there and you'll guaranteed be a millionaire at retirement. And plus, if you continue to do this, you could probably have like 200-300k saved at like 45, which you can take out whenever you want. So it doesn't mean you have to wait till 65 or whatever age you retire to take out the money. You can take it out before as well if you want. This is just to teach you guys the concept of index fund investing and the value that you can get from it. So when it comes to investing, people just talk about individual stocks and the general public just tend to ignore index funds' existence. But I'm here to teach you guys today, and yeah, so I've been throwing those words around quite a lot. So index funds, what are they? Let's get into it. So an index fund is a group of stocks that follow a certain index. A couple examples of an index fund is the S&P 500 and the FTSE 100. When you buy an individual stock such as Apple, which would cost you around $150 at the time of recording this video, you're putting that $150 all into Apple. So whatever happens to Apple's stock price will happen to the amount you put in. Whereas let's talk about that same $150, but instead of putting in Apple, you put it into an index fund. So if you put $150 into an index fund, that $150 will be separated across many different stocks in that index fund. And each stock will be given a different weighting depending on how big they are. So let's say the fund has Apple, Netflix, Amazon, and Alphabet. Alphabet is Google, by the way. So let's say they've given Apple the biggest weighting in the index fund. So that $150, let's say they give a 50% weighting to Apple. So then whatever, so $75 would go to Apple, and then the rest would be weighted out accordingly depending on the weightings in the index fund. So that $150 won't be separated out equally, but depending on how big the companies are and how the index fund works. This also means that the movement of your money is balanced out. So let's say Netflix goes down 5%, but Apple goes up 5%. The 5% will balance out and cancel each other out. This means that your risk is less as a whole and your portfolio is more diversified as well. This is because you're not relying on one individual stock's performance, but you're more reliant on 5 different companies which could be in different sectors, which could be performing differently at different times. This is probably why index fund investing is called passive investing. There are some other benefits and drawbacks to index fund investing, which I will talk about later after I show you guys how to start investing into an index fund and after I show you guys how to become a guaranteed millionaire. So now let me hop onto my laptop and I'll show you guys how to get started investing into an index fund and how you're going to become a guaranteed millionaire. Not billionaire, millionaire. Alright, so this is the website that we're going to use to invest in the index fund. And this is the website that I've started to use now as well, now that I'm 18. So the website is called Vanguard, and all you want to do is search up Vanguard in the spelling on the screen right now on Google and you will find it easily. It's a very reputable brokerage. So once you come to the website, you want to search the S&P 500. So you can go to the search bar and write S&P 500, and if nothing shows up, then okay, nothing showed up, so we'll go back, go to what we offer, and then search their full list of funds, because the S&P 500 is a fund. Okay, so if you don't know what S&P 500 is, it's the 500 biggest companies in the US, all grouped into one index fund. Okay, so if you want to scroll down to USA, and here it is. So this is the S&P 500 UCITS ETF. So it's also known as a VUSA. If you see here that there's 509 stocks within the fund. Alright, so let's just read a little bit about the fund and how it's done in the past and why this one. So if you see here, the rate of return has actually been quite crazy lately. It's had a little down moment here, but it averages out when you look at it. And yeah, I mean, okay, look, for example, price and performance. So to grab one stock of the S&P 500, the market value is £62.77. So you can get a stock of the S&P 500 per month if you put £100 in every month. But yeah, let's check at the portfolio data. Number of stocks, 509. Here's a return on equity. Market allocation. Also, if you want to see how much weighting they put for each sector, you can see that the IT, so the information and technology sector, has the highest weighting. And then second is healthcare. Then it's consumer discretionary, financials, communication services. So as you can see, it's very diversified. So if one sector is down, it doesn't necessarily mean that you're going to lose out, because the other sectors will still bring you back up. And this is the actual companies themselves and the biggest holdings. So Apple has 6%, Microsoft 5.79, and yeah. Okay, so distributions. So there's a quarterly distribution of 1.15%, so that's dividends. If you don't know what dividends is, make sure you comment below and I'll make another video on it. But yeah, so you get a 1.15% quarterly dividend on however much money you put in. It's pretty cool. And they do have a cost, because obviously brokerages like this aren't going to be free, and you have to accept that there's going to be a little bit of a cost, but it's not that much. It's 0.07%, and in order to actually start, you need to have a monthly direct debit of £100, which is why I said £100. But okay, for those of you that I know are going to say, where am I going to get £100 from, and isn't that a bit much? Let's check this out. So this is the national minimum wage, so minimum wage in the UK. So if you look at 18 to 20, so £6.56, and a usual part-time hour job, so 16 hours. So let's say £6.56 times 16. So that's £104.96 that you can make per week by doing a part-time job. And if you times that by 4, in order to get how much you can make a month by doing a 16-hour part-time job with a minimum wage job, let's see, that's £419.84. So if you do a part-time job with minimum wage for 16 hours every month, you can make £419.84 every month. And £100 from that is less than 25%. And I mean, if you're an 18-year-old, you can definitely do that. So yeah, there's no excuses in my opinion. But if you do want to learn how to get another stream of income and make some more money, then make sure you check out the other videos on my channel and follow me on TikTok for more of that. Okay, so now let me show you how you're going to become a millionaire using this. Okay, so this is a compound interest calculator. And remember, compound interest is, I think it was Einstein that said it, is the seventh wonder of the world or something like that. But yeah, so compound interest calculator, and I'm going to show you guys how you're going to turn your investment into £1 million. So initial balance, let's say you put in £100 to start with, and the interest rate, so the return rate, on average the S&P 500 has returned over around 10% every year, so we'll put 10% down. And let's say you're 18 right now, so to retire you have around 45 years. Shall we put 40? Or you can put less, we'll put less after, but we'll put 45 now. And then compound interval is monthly. And then deposits, we're going to put £100 every month at the beginning of the month, and we're going to increase deposits yearly with inflation. A safe inflation rate is around 2.5%. So we'll put that in and then calculate. Look at that. If you don't think this is crazy, then you're crazy, because your initial balance is £100. You've in total added in £97,815. That's all the £100 added up, plus the increases with inflation. And you've earned 1.26 million in interest. And now your account is worth 1.36 million. So your investment of £97,000 over 45 years would be worth this much. So that's how you're going to be a millionaire guaranteed. Okay, so if that doesn't blow your mind, I don't know what will. And think about it, £100 is not that much compared to how much you would be making realistically when you get a normal job. So let's say you're making £40,000 a year, and you can increase your monthly deposits to, let's say, £400. Okay, so £400, and yeah, so let's calculate that and see how much you can get. Look at that, alright? You're depositing £391,000 over the 45 years, and look what you're making, and look what your investment value will be at the end. If this isn't a life hack, I don't know what is a life hack then. And okay, how about this? We'll decrease it to 300, and then we'll decrease the years as well. So let's say you're 18, so let's say by the time you're 40, so how many years is that? So 22 years. And yeah, let's see how much you can get. Honestly, that's pretty crazy still. 300k when you're 40, just by depositing £300 monthly. You guys need to start doing this, no matter how much you start with. Well, it has to be £100 minimum. Just start and just set up a direct debit, and it will go automatically. And one day you'll become a millionaire, and then you'll thank me later for watching this video and listening to me. Because this is a life hack and you guys need to do it. So if you enjoyed this video and found it useful, please make sure you like, subscribe, and turn your post notifications on so you know every time I post. And yeah, thank you for watching. Share it with your family and friends if you found it useful. And yeah, see you guys next time.